What if the wealth of ancient empires never really disappeared? It just changed accountants? What if the same hidden ledgers that counted the pharaohs? Gold now controlled the balance sheets of modern nations, from the treasury in Washington to the trading floors of Wall Street? Because for thousands of years, the true game wasn't about money. It was about who writes the rules of debt. Today, we call them central bankers, investors, and market makers. 3,000 years ago, they were called priests, scribes, and gold keepers. Different names, same power. And the shocking part? The financial system you depend on today, the dollar in your pocket, the mortgage on your home, the inflation eating your paycheck, is a descendant of a royal experiment in control that began before Christ. An experiment that has never stopped. So ask yourself, if the kings of old ruled through gold, who rules through credit today? Where are you watching from? Drop it in the comments, because this is global. And hit subscribe for the unfiltered truth they'll never teach in school. Because by the end of this video, you'll see how the same families, same methods, and same debts that built the ancient world still own the modern one. To understand how Wall Street inherited the crown, we go far back to Babylon, roughly 1800 BC. In clay tablets unearthed along the Euphrates, archaeologists found the first recorded loans, farmers pledging silver or grain at interest to temple scribes. These weren't random trades. They were part of a system that bound peasants to the temple, generation after generation, through debt they could never repay. Sound familiar? Every few decades, Babylonian kings would declare a debt jubilee, wiping the slate clean not out of mercy, but survival. Too many enslaved debtors meant no one left to farm or fight. Debt was power, but too much power risked collapse. Fast forward to Rome. By the 1st century AD, the empires might be its legions, it was its mint. The denarius, Rome's silver coin, was gradually debased, silver removed, value proclaimed by decree. Sound familiar? By the late empire, inflation had destroyed trust in money. Soldiers demanded payment in gold, and the Senate blamed speculators. The illusion collapsed. Now jump to the Medici Bank of Renaissance Florence, 1397. They perfected something Babylon could never imagine: paper credit. Letters of exchange allowed gold to stay locked away, while money itself became words, signatures, and promises. By 1494, Venice had a bond market financing what was the first public debt system. Citizens bought government IOUs, earning interest off empire. Sound familiar yet? That idea that private wealth could fund public power birthed modern finance. And from that moment, control of money shifted from monarchs to monetary monarchs, the central bankers. When America was founded, the battle lines were already drawn. Jefferson warned that banking institutions are more dangerous than standing armies. Hamilton, the pragmatist, built the first bank of the United States anyway, modeled directly on the Bank of England. The colonies had fought a revolution to escape the crown, but they kept its financial machinery. That's the quiet inheritance no one talks about. A 300-year plan of paper promises, rolling debt, and controlled scarcity masked as progress. By 1913, the Federal Reserve formalized the lineage. 12 regional banks, privately owned, bound by a single invisible principle that dates back to those Babylonian tablets. Whoever controls the debt controls the people. Every recession, every bailout, every stimulus is just a reenactment of an ancient ritual power extracted through ledger entries instead of armies. So when you hear words like liquidity, key, or monetary tightening, remember these are modern incantations of the oldest spell in history: debt alchemy, turning paper into control, turning nations into collateral. Here's where it gets darker. Because the link between ancient kings and Wall Street isn't poetic, it's literal. The very structure of our bond market, the hidden web that decides interest rates, is modeled on medieval royal debt. In the 1300s, kings who ran out of gold borrowed from merchant families the Fuggers, the Medici, later the Rothschilds. In exchange, they offered tax rights, trade monopolies, even territories. Centuries later, Wall Street created the same instrument, sovereign bonds, only this time, it wasn't kings pawning kingdoms. It was democracies pawning citizens. Today, U.S. Treasury debt exceeds $35 trillion, but here's the twist. Most of it is owned by the public. It's held by institutions, banks, funds, and the Federal Reserve itself, entities that profit from interest, created by money printed from nothing. A cycle perfected over 3,000 years. 1. Create money from debt. 2. Use that debt to control production. 3. When the system nears collapse, reset and repeat. It's the same three-step pattern carved into Babylonian tablets, stamped into Roman coins, scribbled in Florentine ledgers, and now coded into Wall Street algorithms. You think the system evolved, but it was designed refined like a weapon. And here's the name that connects it all, the institution that silently guards the continuity of this empire of debt. You won't believe the name. The name you've been waiting for isn't a person. It's an institution, one that even most economists never mention. It's called the Bank for International Settlements, or the BIS. Created in 1930 in Basel, Switzerland, it was supposedly built to manage German reparations after World War I. But its founding charter reveals something far more disturbing. The BIS was established as a sovereign entity, immune from taxation, inspection, or national law. Let that sink in. A bank above nations. Even its nickname among insiders carries a sense of divinity, the central bank of central banks. And here's where the ancient thread resurfaces. The BIS was designed to do for the global economy what royal treasuries once did for kingdoms: manage gold reserves, clear debts between rulers, and maintain stability by controlling flow, not fairness. If the Federal Reserve is America's monetary monarch, the BIS is the imperial court. Its founders included representatives from the Bank of England, the Reichsbank, the Federal Reserve, and the Bank of France. These weren't public servants. They were the heirs to private dynasties whose wealth and influence stretched back centuries. And here's the kicker. Even after the Second World War, when most institutions tied to the Axis were dismantled, the BIS survived, protected by both sides. Why? Because it handled something too valuable to destroy: the world's hidden gold settlements. During the 1940s, as nations scrambled to rebuild, the BIS quietly managed the transfer of over 3,000 metric tons of gold. Gold that historians now know came from both Allied and Axis sources. Officially, it was reparations. Unofficially, it was a reset, the reallocation of power under new management. Sound familiar? After the war, the BIS evolved again. Gold was replaced by the dollar. The temples of the New Age became central banks, and the priests wore suits instead of robes. And at the top of this pyramid sits a balance sheet most people have never seen. In 2025, the BIS holds assets exceeding $450 billion, but controls far more through coordination, setting interest rate norms, dictating reserve policies, and influencing the direction of global liquidity through its Basel Accords. The Basel Accords are the modern version of royal decrees, rules that determine how much money banks can lend, how much they must keep, and how risk is defined. Change one definition, say, how safe a bond is, and trillions move overnight. It's the same sleight of hand ancient gold keepers used when they marked temple ledgers. Today, it's called monetary policy. Here's where the illusion becomes concrete. When you deposit $1,000 in the bank, it doesn't sit there. That deposit becomes a fraction, maybe 10% of a much larger loan created out of thin air. This fractional reserve system dates back to the goldsmiths of 17th century London, who realized not all depositors would demand their gold at once. They issued more receipts than they had metal of fraud that became finance. The BIS and its descendants perfected it. Now, with digital currency, even that fraction vanishes. In 2020, the BIS began formal research into central bank digital currencies, CBDCs, declaring them the future of money. But here's what that really means. The ancient ledger once kept in temples. Then banks will soon live entirely on centralized, programmable databases. Every transaction traceable. Every balance modifiable. Every citizen collateral. And if you think this is theoretical, remember the test runs. China's digital yuan, rolled out in 2021, now handles billions in daily transactions, all monitored. Nigeria's e-Naira ties digital ID to spending access. The European Central Bank's digital euro is in late testing, expected by 2027. Each system is sold as innovation. But peel back the language, it's the same royal logic. Control the currency, and you control the people. Let's connect the dots numerically. The global debt market now exceeds $330 trillion. That's 4 times global GDP. The derivatives market, the shadow layer, is estimated at over $1 quadrillion. And yet, less than 2% of that represents anything tangible. Everything else is promises. Digital hieroglyphs in ledgers owned by institutions that trace their DNA to the ancient world as gold keepers. This is not capitalism. It's neo-feudalism with better branding. In ancient Mesopotamia, the scribes who managed debt tablets worked for temples. In modern finance, central bankers manage credit systems for governments. But who manages the central bankers? The BIS. No elections, no oversight, no citizens. Their annual meetings are held behind closed doors in Basel, attended by the heads of the world's 63 largest central banks. No minutes, no transcripts. And from those meetings, global monetary norms emerge: interest rate coordination, liquidity programs, capital flow guidance, all shaping your mortgage rate, your job market, your nation's solvency. When the BIS raises a systemic risk warning, markets tremble. When they declare a policy non-compliant, banks lose access to global capital. That's not advice, that's command. And the irony? The BIS was modeled on ancient Babylon's clearing temples, where merchants would settle debts in gold under priestly supervision. Same architecture, different script. Which brings us back to Wall Street. Wall Street isn't an American invention. It's the latest colony in a 3,000-year-old empire of debt. The brokers, analysts, and fund managers are its new scribes. The markets, its temples; the screens, its altars. And every trade, every bond, every loan echoes an ancient truth. The house always wins because the house writes the rules. This is the silenced discovery historians and economists avoid, not because it's unprovable, but because it's undeniable. When the structure itself is the continuity, you don't need a conspiracy meeting in a smoke-filled room. The system is the conspiracy, and the kings? They never died. They became corporations. Now, imagine what happens when this 3,000-year system, the empire of debt, goes fully digital. No coins, no cash, no paper trail, only access. The year is 2035. Your money doesn't live in a wallet. It lives on a server owned by your central bank. Every purchase, every payment, every donation passes through the same gate. Your paycheck arrives not as dollars, but as digital credits that expire in 90 days unless spent in approved sectors. You don't save. You comply. In this world, inflation isn't a policy error. It's a feature. It keeps you moving, buying, working, obeying. And behind the illusion of convenience, the same ancient formula hums. Control through scarcity, obedience through belief. Your social score replaces your signature. Your digital ID links to your financial behavior. Miss a payment? Access throttled. Question the narrative. Account under review. It's not tyranny through force, it's governance through permission. And no army is needed when code can freeze your life with a single click. What if the future economy isn't owned by governments or billionaires, but by the algorithmic descendants of the gold keepers? What if the priests of Babylon simply traded temples for terminals? Because make no mistake, the architecture is already built. Central bank digital currencies aren't theory. They're already being tested, standardized, and synchronized to the Bank for International Settlements project Ambridge, connecting nations into one programmable monetary web. The same way medieval kings surrendered sovereignty to creditors, modern states will surrender autonomy to code. Every ledger entry becomes law, every transaction testimony, every citizen collateral. And here's the quiet trick that makes it irreversible. When value becomes data, control becomes invisible. You'll never feel ownership disappearing because the numbers on your screen will still move. But the permissions behind them will tighten. Slowly, silently, irrevocably. Think about it. What happens when your currency can only be spent on approved goods? When fuel rations, dietary quotas, or carbon limits are embedded in your digital wallet? What happens when your financial freedom can be toggled off like a switch? What happens when your paycheck expires? That's not a dystopia. It's a timeline. Because the infrastructure isn't in the future, it's already online. The BIS blueprint predicts that by 2030, over 80% of the world's central banks will have launched or adopted some form of CBDC network. 80%. A uniform monetary code written not by elected officials, but by technocrats in Basel, the modern high priests of liquidity. And once that switch flips, history closes a 3,000-year loop. The same empire that began in the temples of Sumer, where belief made debt divine, will be reborn in the cloud, where data makes debt eternal. You might think this sounds paranoid, but remember, every collapse in history began as a reform. Every revolution was sold as progress. Every chain was forged from promises of safety and order. The next empire won't need crowns, armies, or borders. Its rulers will write algorithms. Its temples will hum with servers. Its currency, your obedience. And when it arrives, you won't even notice the moment belief becomes bondage, because it'll feel like convenience. A world where freedom expires with your balance. A world where history's oldest spell finally perfects itself. So where does that leave us in 2025? Standing at the edge of another transformation, where the oldest form of control debt merges with the newest form of obedience data. Every ancient system of domination ended the same way. When control became so total, it suffocated the flow it depended on. Babylon fell. Rome collapsed. The Venetian banks burned. Each time, the system drowned in its own success. Sound familiar? Because the new system, digital, global, and algorithmic, is faster, stronger, and far less human. When credit is programmable and identity is tied to access, control isn't just financial anymore. It's existential. And yet the cycle could still break. History's greatest collapses have always birthed renaissances. The challenge is recognizing when the illusion ends and the reckoning begins. The silenced discovery is this: the kings never ruled by gold or law, they ruled by belief. As long as people believed the system worked, it did. And today, belief is all that's left. So ask yourself, when faith in paper, pixels, and promises finally cracks, who benefits from the next reset? Share this video. Comment where you're watching from. Did your country's banks or markets ever bow to Basel? And if you're ready for the unfiltered truth, hit subscribe, because what comes next on this channel isn't history repeating. It's the blueprint for what's about to happen again. Watch the next video that's appearing on your screen. Right now, it's all connected.